Welcome to Mr. Market Uptrend channel. If you are foreign investors who are interested in Vietnamese stock market, this YouTube channel will provide the most objective information. In the time of put-through trading, total number of shares available for foreign investor to buy will remain unchanged if the transaction is negotiated between two foreign investors. Today's video consists of three regulation groups, which are transactions, ownership limits, and tax. Let's begin with transaction group. Principles for calculating the volume of shares and fund certificates closed on the Vietnamese stock market. Thus, foreign investors are still allowed to trade. In the time of automatic trading, buying volume of shares and closed-end fund certificates will be deducted from the number available for foreign investor to buy immediately after the buy order is executed. Selling volume of shares and closed-end fund certificates for an investor will be added to the number available for foreign investor to buy right after the settlement. T+2. Buy orders or remaining parts are partially filled by orders for an investor will be automatically cancelled if they are not executed when inputted into the trading system or ownership limits for foreigners is reached. In the time of put-through trading, total number of shares available for foreign investor to buy will remain unchanged if the transaction is negotiated between two foreign investors. Let's continue with ownership limits group. Decree 60/2015 NDCP on foreign ownership limits in the Vietnamese security markets. For general public companies cannot set their own foreign ownership limit. In most cases, foreign investors can buy 100% of the capital of a Vietnamese company. Shareholders holding 5% or more of a company's total shares are considered major shareholders. Major shareholders must report to the Ho Chi Minh Stock Market Exchange or Hanoi Stock Market Exchange when they become major shareholders and must also declare or announce certain transactions in the daily stock exchange. For the banks, the foreign ownership limits of listed or unlisted banks is limited to 30% of the total chartered capital. The maximum holding for an individual foreign investor is 5%. For an institutional foreign investor is 15%, and for a strategic foreign investor is 20%. Foreign investor must submit an application for share purchase to the State Bank of Vietnam for specific approval, regardless of the amount they want to buy. Finally, we will go to tax regulation. According to regulations, non-resident institutional investors will be exempt from equity dividend withholding tax, and foreign investors are exempt from withholding tax equity dividends. In addition, foreign investors when trading in the Vietnamese stock market will have to pay a bond interest rate of 5%, transaction tax on selling stock, fund certificates, and bonds, as well as security fees according to regulation. Investors can monitor information about specific tax rates to be paid on the screen. Thank you for your attention. Don't forget to follow and subscribe our channel to have many knowledge with Mr. Market Uptrend. If you have any questions, feel free to connect Kakaotalk with us. Thank you.